Hey guys, this is Bruce with this week's edition of 3 Stocks to Consider Right Now. Now, I've got the chart of the ES up here. As you can see, the market is really messy. We have been in this downward channel since here's the first of the year, 2026. Really right there. Lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. And we're actually breaking through the bottom of this channel. There's a 200-day. Maybe we're near a bottom. I don't know. It's really hard to tell. But that is the reason that you have to be a good stock picker in this market. The old guard is not working. And let me show you. So we'll go through a couple names here. Let's look at Amazon. You know, the Mag 7. The money's just flowing out of these names. I think it's going to be the case for a while. I like them, but Amazon, there's the 200. We're way under the 200. This is not a constructive looking chart, right? Sorry about that. Another meeting I had going on. But look, let's look at Amphenol. I like Amphenol. It's not, this might be a good time to buy it. I don't know, but that's not one of our names today. That's not a constructive looking chart, right? Look at Oracle. I'm just trying to think of some of these names. I mean, look at this. That's the 20 crossing below the 50, crossing below the 200. This is just down, 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 down. And I love Oracle. Great stock. I've had it for years. I don't own it right now, but I've had it for a long time. That's not a constructive chart. So let me show you the ones that are constructive. We got 3 names. We'll go through them pretty quickly. The first one is FTI, which is FMC Technology. Now, this is what you want to see, right? So first of the year, that's dotted line right here. This thing is not doing this stuff. It's going straight up, right? Why? Because it's in the right sector, and obviously money is flowing into it, right? That's what I look for. So this is an upstream energy company. They support oil and gas industry. Obviously, another good sector to be in. Done a lot of names in that over the last, I don't know, 6 months, long time or more. But again, good constructive looking chart, right? That blue line is the 20-day. There's just very, very, very little pullback. That's what you want to see. So we need 3 reasons to buy it. Good chart, lower left to upper right. Like I was saying, right here, it looks like it's consolidating around the 24, the next run higher. Good sector, again, upstream energy support activities for oil and gas. 3-year earnings growth rate, 762%. I've got the stats up here I'm looking at. 726% 3-year earnings growth rate. That's what you want to see, right? RSI is 47. Win, 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 win. Like it. We got earnings coming up out here around April 22nd. So this, should continue higher. I like the name. And, I would just buy the stock here. Obviously, if it pulled back a little like some of these prior dips, maybe if we get a chance, it'd be a little more interesting. But that's the kind of chart you want to look for, right? So the first one is FTI. The second one is VRT, Vertiv Holdings, if I'm saying that correctly. Again, notice, first of the year, we're not doing this. We're not even doing this. We're going straight up. Earnings, great earnings, big gap, higher, 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 right? The money is flowing into some names and is just pouring out of other names, and that's what you've got to look for, right? Be a stock picker in this market. So Vertiv Holdings, again, if I'm saying that correctly, around 265-ish. There's a 20-day. Again, very, very strong looking name. Great chart. Now this is industrial manufacturing. We've got 3 reasons. 1, we got a great chart. 2, we got a great sector, industrial manufacturing, data centers, IT infrastructure. That's what they do. Again, that's where you want to be. You want to go where the money's flowing, not where the money is flowing out. You want to go where the money's flowing in. You want to be in the hot sector, and you don't want to be buying the dip in this kind of market, right? Number 3 reason, 3-year earnings per share growth is 233%. I mean, that's crushing it, right? 3 years earnings growth. RSI is 54. So win, win, win. Looks good to me, right? The third one, again, I'm going to keep it kind of short here. The third one is Coherent, COHR. All right, so check this out. coherence around 260 20-day. It has come back. I mean, again, my number one reason, you can look at a chart even if you don't know the name, right? Does this chart go lower left, upper right? Is there anything really crazy going on here? No, it's all pretty much straight up like that. We have a couple of little pullbacks here. That's the 50, that's the 50, got through a little bit there. This is great. Just hugging that 20-day, I like that. Looks like it wants to go higher, right? Good chart, number one reason. Number two, good sector. Industrial engineering, electronics is it's one of the sectors where the money is flowing into. The other thing, you guys know at Simpler, John Carter has the squeeze. This is the, well, you know what? It's kind of funny. This said ideal squeeze earlier today. But it's flickering back and forth, I suppose. You can see it right there. You see when those the little arrows line up for the squeeze. It was pointed up today. I suppose that's probably because the market today was down. As you can see over here, the market was down 109 points from this morning when I looked at this chart. But anyway, still like the chart. Everything looks great. Great sector. 1 year earnings growth. 1 year earnings growth. 39.2%. That's crushing it. Again, pull back to the 20. Now on this one here, this is where it gets a little more interesting. Short interest is 15.68%. That is a good sign. That don't let that scare you. That's a good sign, because when people have to cover this, you get the moonshot thing, right? And of course, when we do this, when we enter, we go to smaller time frame charts, and I can show you how to do that. Maybe I'll do a different video on that at some point. But we have we'll stop ourselves out if it starts going against us in a meaningful way or whatever. And it also depends on the type trade we use. We may use a butterfly, or we may use a debit spread or something. Even a covered call or a collar or something like that. But again, great looking chart, great sector. That's what you want to look for, lower left, upper right. Don't be trying to chase these. Again, as much as I like Amazon, that's not a constructive chart. I'll show you another one. What about Tesla? Great chart. Now, the market's been down all year since this year, and look at this trend. Tesla's down with it. Lower lows, lower highs, lower lows, lower highs. Now that's a 200. Maybe it finds some support here. Maybe it gets going again. I think it does. I like Tesla. But if I've got, if I can only take one trade, is it going to be Tesla, or is it going to be, one of these other names? It's going to be one of these, right? Just makes sense. So hope that makes sense. Hope it helps. I do this once a week. If you're not subscribed to the newsletter, do it. It's free. And also, if you join me in the bias room here at Simpler, and I will help you. We do this every day. So thanks for your time, guys. I'll try to keep it short. I'll have another newsletter video out for you early next week. Thanks, guys. I appreciate it. Take care.